Hi friends, if you're looking to invest in stocks using SIP methodology for long term, then this video is perfect for you. Because in this video, I'll speak about 5 stocks from 5 different sectors that have bright future for the next 5 to 7 years. Please do not take these stocks as recommendations. Use this information in your own analysis. With that, let's get this video started and go to stock number 1. This stock is from semiconductor sector. The name of the stock is CG Power and Industrial Solutions. Have a look at my screen and you will see that in the last 5 years, if we speak about the SIP returns of this stock, the stock has moved from a total investment of 6,000 rupees to 1,24,000 rupees. Meaning in the last 5 years, if you invested 100 rupees every month, then that would have meant total 6,000 rupees of investment, and that 6,000 rupees of investment would have become 1,24,000 rupees. And if you were to calculate XIRR returns, then you would see that it will come out to be 147%. Now, of course, past returns does not give any guarantee for future returns, but we still need to have a look at the past history of the stock because it tells us a lot about that stock. It tells us about the confidence of the market in this particular stock. That's why I've shared this data with you. Now, I would really like us to focus in terms of the last 3 years of fundamentals of this stock. And if you see the stock chart, one thing that you will quickly note is that this is a non-cyclic stock. And if you're looking to invest in SIP stocks, one factor to consider is that try and find stocks that are not cyclic in nature. They are growth stocks so that you have better chances of earning some profits in the coming years. Now, one of the reasons I like this particular stock is because of the semiconductor space overall and how that is going to behave in the next 5 to 7 years, because Indian government is putting a lot of money into the semiconductor space. For example, in February 2024, if you see, the Union Cabinet approved 3 semiconductor units in India with the outlay of around 76,000 crores. And CG Power is going to be one of the companies setting up a semiconductor unit in Gujarat in partnership with 2 companies, one from Thailand and one from Japan. Now, this doesn't mean that this company is going to give you revenues and profits from semiconductor space in the next 6 to 12 months. What their management says is that it is going to take them at least 4 years of time to start realizing these revenues. Now, a couple of very important points about this stock that you must know. Point number 1 is that if you see my screen, you will notice that in the last 3 years, the sales of the company has grown by around 40%. And if you look at the profit growth, you will see that in the last 3 years, the profits have grown by 111% CAGR basis. What is driving this growth in the company is what we need to understand. And very quickly, if you see, 68% of their revenues are coming from industrial systems, out of which 18% is contributed by railways and 32% are coming from power systems. Both these segments, power system as well as industrial, in the last 2 to 3 years have been trending like anything. And in my view, in the next 5 years, these both segments are going to give really good revenue visibility because there is a lot of capex going into these sectors. And I've spoken about these in my various videos on this channel, including BHEL and many other power sector themed stocks. And that is why precisely last 3 years fundamentals, if we consider of this stock, you will see EPS growth has been around 104%. ROCE has been very good, 50%. And when their semiconductor plant is ready, that is going to further boost these revenues in my view. Secondly, if you look at the balance sheet of this company, you will see that debt is very low. Almost a debt-free company is what we can see here. Last very important point about fundamentals of this stock is that the company as of March 2024 is sitting at unexecuted order book of around 6,000 crore, which is 45% higher than the previous year. So there is a good revenue visibility as well for the next 1 year at least. Coming to the valuation of this stock, you will very quickly notice that the PE is very high compared to the industry PE, and PB is also very high comparing to the industry PB. But there is a reason the stock is enjoying this premium because of the tailwinds I've explained in the semiconductor space, in the power space, in the industrial segment space. And that is why you see capital goods manufacturing stocks such as Siemens, ABB, they all are trading at a very high PE right now. And that's why investing in such stocks in the SIP mode makes more sense than investing in lump sum. Not a stock recommendation here, but I've given you this analysis and I've created a full video about this stock on my channel. Please go ahead and watch it if you need more details about this stock. Before I move to stock number 2, one thing about SIP investing is the complication of calculating the taxes. For example, if you have been doing SIPs and if you build a corpus of let's say 10 lakh rupees and now if you want to redeem 2 lakh out of it, how to go about calculating capital gain taxes? Is it going to be short term, long term capital gain? And this brings me to the partners of this video, cleartax. Cleartax have made capital tax gain calculations very easy. Because using cleartax, you can import thousands of capital gain transactions within seconds, and then automatically it will calculate your capital gain taxes, and finally it will select the right ITR form for you. Cleartax allows you to import capital gain transactions from more than 25 stock brokers and 20 plus crypto brokers. It will show you summary of short-term capital gain, long-term capital gain across various assets such as mutual funds, stocks, etc. You can also see individual transactions as well. Beauty of filing your returns using cleartax is that as soon as you enter your PAN number and upload your form 16, it extracts your personal income details and pre-fill up to 90% of your information available with the IT department. While filing the returns using cleartax, it will also give you tax saving suggestions. Based on your information, it will recommend you the best regime for you to save maximum taxes. With AI assistance, 24/7 support and free notice management services, cleartax in my view offers best tax filing experience and unparalleled peace of mind. I would recommend you to check out cleartax for your income tax needs, and you can use my code to get additional 10% discount straight away. The link is in the description. Second stock is a hospital stock called Naren Rsal. If I invested 100 rupees per month in the last 5 years, that 6,000 rupees would have become 14,000 rupees as of now. That translates to an XIRR of 36%. Again, past is not a prediction of the future, but we still need to know how the stock has performed in the past. If you see the last 5 years of stock price history, you will notice that again, this is not a cyclic stock. It has been a growing stock in the last 5 years. More importantly, if you see the valuation of this stock right now, for example, PE ratio is well below the industry level. And if you compare this with many other leading hospital stocks, you will find it at a very low PE as well as low PB right now. But more importantly, if you look at the fundamentals of this stock, for example, if you look at the ROE percentage, because hospitals are capital intensive stocks, you will notice that these numbers are really looking very good compared to many other hospital stocks. Even if we consider 5 years of ROE, 5 years of ROC percentage, you will notice that compared to many other hospital stocks, these numbers are looking very good in my view. If you look at the P&L account of this stock, you will notice that right now the stock is sitting at all-time high revenues, all-time high profits. If you look at the last 3 years of sales growth, 25% of CAGR, which is very healthy. Compounded profit growth in the last 3 years is around 365%. But what really matters is the future. And if I speak about future, company wants to spend around 1600 crores of capex. Have a look at this FY25 projected cash. These numbers are in rupees millions. So I have converted them into crores, and if you total these up, it will come out to be around 1600 crores of capex, which is going to be more than double of what they did in FY24. And this capex is going to go into building new hospitals, new infrastructure. All of that in the long run is going to give a lot of revenue and profit visibility in my view. That's why this stock is a long-term bet, and SIP investment in such stocks makes a lot of sense in my view. Not a stock recommendation again, but I've given you a lot of analysis about this particular stock. But lastly, I want to also speak about one of the biggest risks that hospital stocks are facing right now, that the Supreme Court has been asking Indian government to ask private hospitals to standardize their hospital charges, due to which many hospital stocks, including Naren Rsal, has been under huge pressure in the last 2 to 3 months. That's why in the last 1 month, the stock has given -5% returns. The next big action that is going to happen on hospital stocks is 10th of September. That is when the Supreme Court will hear the plea, and there may be some more updates coming from that particular hearing. So far, if you're liking this video, request you to hit the like button. It takes us 8 to 10 hours of time to create one video, so appreciate your support. And therefore request you to let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. Also, if you're looking to get in-depth analysis of stocks, mutual funds, ETFs and various other assets, you can consider subscribing to my YouTube member community, because almost on daily basis I post in-depth analysis of various assets, and you will find that hugely beneficial for your investing journey. Third stock is from auto sector, Mahindra and Mahindra Limited. Have a look at my screen and you will see that if I invested 100 rupees per month in the last 5 years, my total 6,000 rupees of investment would have become 20,000 rupees. And this translates to XIRR of around 52%. Now Mahindra and Mahindra, as all of us know, is operating in multiple segments like auto and farm, finance and technology, even growth gems such as Mahindra Life Spaces. But the reason I like this stock is because of their leadership in the SUV segment. Some of their SUVs, for example, XUV 700, have got massive bookings within few hours. So have a look at these numbers here yourself. And if I speak about the leadership in the SUV segment, you will see that they're number one from a market share perspective, from a revenue perspective, but from a volume perspective, they are number two right now. And more importantly, the reason I am very bullish about the SUV segment is because SUVs have been consuming a lot of market share from the passenger vehicle segment. Have a look at this data. I don't know whether you can read this, but in FY20, 34% of passenger vehicles were SUVs versus now 60% in FY24. So it has gone up from 34% to 60% in the last 4 years. And that is why companies like Mahindra and Mahindra have been building capacity. Have a look at my screen. In FY20, they had 19K of overall SUV capacity, which now stands at around 49K, and the company projects it to go to 72K by the FY 2026. By FY23, company is going to launch 23 new models into the auto and farm sector. 27,000 crores of capex is likely to happen between 25 and 2027. And this is why precisely I say stocks like Mahindra and Mahindra are future long-term bets because of the capex injection that the company plans to do. Last point on Mahindra and Mahindra is the valuation. If you look at the valuation from a PE ratio perspective, from a PB ratio perspective, it is not hugely overvalued, almost trending at the industry PE right now, almost half of the industry PB right now. Moving on to fourth stock, which is from the power sector, a company called REC Limited. I've spoken about REC Limited a lot on my channel and there are videos that you will find. But if I speak about the SIP returns of the stock, you will notice that in the last 5 years, if I did 100 rupees per month, my 6,000 rupees would have become 26,000 rupees. And this translates to XIRR of around 64%. Now, I'm not going to deep dive into REC because I've done a lot of analysis already. But the main tailwind that you need to know about this stock is the investment that is going to happen in the power sector. Have a look at my screen and you will see that Indian government wants to add around 517 gigawattage by 2031 and 2032. This is a huge capacity that is going to get added into the power sector. And if I give you the breakup of this, you will notice that renewable power sector is going to see majority of that, which is going to be 375 gigawatts, followed by thermal, which is going to be around 87 gigawatts, followed by hydro, which is going to be around 42 gigawatts, and lastly the nuclear capacity that is going to be around 12 gigawatts. Now, one option is to find stocks which are operating into renewable energy sector or thermal or hydro. For example, likes of SJVN, NHPC are very good hydro players. Now, each of these companies will have their own risk profiles, their own return profiles and so on. And the second option is to find companies that are going to fund these companies that are going to operate in the power sector. And this is where REC comes. If you look at the outstanding loan book of REC, you will notice that it is standing at around 5 lakh crores and they are financing a lot of companies into the power sector. So their loan book is constructed by multiple companies that are operating in power generation sector, power distribution, renewable, hydro and a lot. So no matter where a company is operating, whether it's operating in hydro, thermal or solar, they are going to need money. They're going to need capex investment, and this is where companies like REC are going to give them financing. And if you want to know more about REC, I've created 2 videos on my channel. Please go ahead and watch them. I'm not going to discuss those details here. But lastly, I will quickly touch upon the valuation of the company. Have a look at the PE ratio. Have a look at the PB ratio, well below industry level right now because of the higher earnings that the company has been enjoying in the last 12 months. Moving on to stock number 5, which is from the banking sector, the stock called SBI. If I invested 100 rupees per month in the last 5 years, my 6,000 rupees would have become around 13,000 as of now. And this translates to an XIRR of around 32%. Now, the reason I really like SBI as a bank and is one of my long-term bets is because of what you see on my screen. The sheer scale of SBI is just mind-boggling. 1 out of 3 Indians is served by SBI. When it comes to customer deposits, they have 22% market share. When it comes to the loan book, they have around 19% of the Indian market share. But more importantly, the chart that you see will beautifully summarize the history of SBI. You will notice that the quality of the loan book across various segments such as the corporate, retail loan book, or for that matter, SME loan book, agri loan book, if you see the quality of this loan book, it has been improving year on year. You see these blue lines here, which shows you the gross NPAs that the company has been operating. For example, in the SME sites, the FY20, the GNPA used to be 9.43%. It has come down to around 3.75% now. And this has been happening while the loan book is continuously growing. You see the massive growth the SBI has seen in the loan book in the last 2 to 3 years. So growing the loan book and at the same time bringing the gross NPAs down is what you expect from a bank, and this is what precisely SBI has been doing. Now, there's a lot of criticism about SBI that 10 years ago they used to give money to politicians and high profile people and used to then write off that debt. But my point is that I did not invest in SBI at that time. I am considering SBI right now when the quality of the assets is at very, very good levels and the loan book is continuously growing. And the second important point I want to make about SBI is the valuation. Have a look at the PSU banks and the valuation and you will see that SBI right now is trading at around 11 P and the industry P is at 9. Just compare the scale of SBI versus like Bank of Baroda, Punjab National Bank. Do you think the PB value of SBI should be at around 1.80? In my view, this valuation is still very, very attractive. Again, not a stock recommendation, but I've given you my view in terms of where I see SBI among many other PSU banks. So in summary, in this video, I've explained 5 stocks, but you will see the broad pattern I've followed here is that all these 5 stocks are non-cyclic in nature, number 1. Number 2 is that these 5 stocks are operating in sectors that have tailwinds or they are evergreen sectors such as banking. Point number 3 is I've picked up these stocks from 5 different sectors, giving us a very, very good diversification. Number 4 is I see visibility of revenues and profitability in the next 5 to 7 years. These are the factors I typically tend to look at while looking at stocks for long term in a SIP mode. But I would love to know which are the stocks you are considering for SIP investment for a long term. Please let me know in the comments. And lastly, as I explained in my video, calculating the capital gain taxes for SIP investing might be complicated. So definitely do check out cleartax. You will find the link in the description. I hope you enjoyed this video. I'll see you in my next video. Until then, keep rocking.